It's pretty hard to ignore the noise when Bitcoin starts making moves. We saw it just recently, didn't we? Took that tumble, dipping below $109,000.
Yeah.
And that kind of volatility, well, it definitely gets people talking. But what really stood out to us, I think, is what a certain group of Bitcoin holders were doing during all that shaking.
Absolutely. While the headlines were all about the price drops and these big liquidations, there was something else happening underneath.
Yeah.
We've been digging into this Cointelegraph piece that breaks down the recent action, and it really highlights some, interesting behavior from the long-term crowd.
Exactly. So that's our mission today, really, to dive into this apparent split. Who are these long-term holders, the LTHs, who seem kind of unfazed by these dips? And what can we learn from what they're doing? Let's maybe start with those market jolts first. It wasn't just a little dip, was it?
No, not at all. The article points to two pretty distinct major liquidation events. The first one kicked off when Bitcoin slipped under $111,000. That forced over $97 million in long positions to be liquidated. Gone.
Wow.
And then it dropped again, breaking below $109,000, and boom, another $88 million in longs got wiped out.
Oof. That's a serious amount of forced selling. It kind of paints a picture, doesn't it? Traders likely using leverage, borrowing money, betting on the price going up, and then the market turns and they're forced to sell. Sounds like a painful lesson in risk management for some.
Precisely. The Cointelegraph piece is pretty clear that this mainly hit the over-leveraged short-term traders, the folks trying to make a quick buck on price swings. But that strategy, it can burn you pretty badly when things get volatile like this.
Okay, so you've got one group getting shaken out, but then there are the long-term holders, the LTHs. They're playing a different game entirely, right? What was their move during all this?
Yeah, and that's really the core of it. The article stresses that these LTHs, usually defined as holding Bitcoin for, say, a year or more, they were quietly capitalizing on the whole reset. Instead of panicking and selling, they were actually adding to their Bitcoin holdings.
So while some were forced sellers, these guys saw it as a chance to buy more. That's a really interesting split in strategy, isn't it? What makes them so confident to buy when others are feeling the heat?
Well, the article brings in some analysis from CryptoQuant to explain this. An analyst there, Amari Taha, he basically said, look, over-leveraged short-term traders were fleshed out. Long-term holders have been quietly capitalizing on the reset.
Right.
It suggests a much more calculated approach, maybe seeing the dip as a discount.
Right. It's not just a feeling. There's actual data backing this up. What else did Taha's analysis show?
He went on to say that these LTHs often see these kinds of drops, especially the ones fueled by liquidations like this, as prime opportunities to strengthen their positions.
Okay.
Their confidence probably comes from a longer view on Bitcoin's value.
Right.
Or they see the short-term ups and downs as just noise, not some fundamental change.
That makes a certain kind of sense. If you fundamentally believe in Bitcoin long-term, maybe as digital gold or a hedge, whatever, then a temporary price drop caused by leveraged traders getting squeezed out, well, that wouldn't necessarily shake your conviction.
Exactly.
It might even look like a sale, like you said.
Precisely. And to back this up, the article points to a big jump in something called long-term holder realized capitalization. It apparently surged to over $28 billion. That's a level we haven't seen since back in April.
Okay, realized capitalization. That sounds a bit technical. Can you break that down for us? How's that different from just market cap?
Sure. So think of it like this. Instead of just taking all of the Bitcoin held by LTHs and multiplying by the current price,
right,
realized cap looks at the price each Bitcoin was last moved on the blockchain. So if an LTH bought Bitcoin a year ago when it was cheaper, that lower price is what counts towards their realized cap until they move it again. So when this LTH realized cap jumps up significantly, like it did here, it means a lot of Bitcoin held by these long-term folks was acquired at some point and is now reflected in this metric. It's more about the aggregated cost basis, the value when they actually got the coins.
Got it. So it's like tracking the collective purchase price for the long-term crowd. And a big jump suggests they've been actively adding recently.
Exactly right. And Taha's conclusion from this, he says it reflects the deep conviction of LTHs. Their buying during these dips, he argues, shows strong underlying support and actually builds a stronger foundation for potential future price growth. They're essentially putting their money where their mouth is, doubling down.
So a picture emerges. Experienced holders seeing weakness as a buying opportunity, reinforcing that long-term belief. Now, the article didn't just stop there. It also mentioned some technical analysis, another angle on where the price might go.
Yeah, that's right. Another crypto quant analyst, Ibrahim Kozar, he pointed to a double bottom chart formation. Now, in technical analysis circles, that's often seen as a potential reversal signal.
A double bottom. Okay, so like the price hits a low, bounces, then comes back down to roughly the same low again, and then hopefully starts heading up.
That's the classic look, yeah.
Yeah.
Kozar's take is that this pattern suggests the bearish pressure is weakening. The selling is maybe losing steam, and the buyers might be starting to step back in and take control. It's a potential sign things could be turning around.
Okay. And did he give any potential price targets if this pattern holds?
He suggested that if this zone holds as support, meaning if the price doesn't really break below those recent lows, then levels above $112,000 seem well within reach. So technically speaking, there's a case for an upward move if that support level proves solid.
Interesting. So we've got the fundamental story of LPHs accumulating with conviction, and then a technical indicator suggesting a possible rebound. Where was the price actually trading when this piece was written?
According to the article, Bitcoin was just under $108,700 on Coinbase at that time. It had bounced a bit from a low around $107,550. But it had also bumped its head against resistance around $110,000 a couple of times earlier that week. So still a bit of a tug of war going on.
Right. Not a straight line up or down. And there was also a chart mentioned. Something to help visualize this?
Yeah, they included a chart from CryptoQuant. It apparently showed the net realized cap for short-term holders marked in red and the long-term holders in green. So you could likely see visually that divergence we've been talking about, with the green LTH line trending up, while the red line might have been showing more choppiness from those liquidations.
Makes sense. A visual to back up the numbers. And just one more thing. There was a related article linked, wasn't there? Something about Japan's bond market.
Yeah, the title was something like, Bitcoin's new highs may have been driven by Japan bond market crisis. It's just a quick reminder, really, that Bitcoin doesn't operate in a vacuum, Broader global economic stuff, what's happening in traditional finance, it can all feed into Bitcoin's price, influencing both the short-term jitters and maybe even these long-term investment plays.
Okay, so let's kind of wrap this up. We saw Bitcoin take a hit, causing some significant pain for short-term leveraged traders who got liquidated. But importantly, the long-term holders, they acted very differently.
Yeah, they saw it as a buying opportunity, accumulating more Bitcoin, which showed up as that big jump in their realized capitalization. Real conviction there.
And then you add the technical analysis piece suggesting a potential recovery if the recent lows hold as support.
It really paints a fascinating picture, doesn't it? This strong contrast between the reactions of short-term players and the steady accumulation by the long-term believers.
That rise in the LTH realized cap really hammers home that conviction. It's them acting on their beliefs, and the technicals add another layer for what might happen next.
So it leaves you with a pretty interesting question to think about. What is this really stark difference in behavior? The short-term reaction versus the long-term accumulation actually tell us about why people hold Bitcoin in the first place. What are those fundamental drivers? And then how might these wider global economic currents, like that hint about the Japan bond market, play into these long-term strategies and the market's overall direction? Lots to keep an eye on there.